All right, let's jump right in. Today, we're following the money, the big money. We're going to try and crack the code on where major financial institutions are apparently placing their bets in the crypto market, and more importantly, what that might tell us about the future. So here's the game plan. We'll kick things off with a huge headline from a bank that really shook things up. Then we're going to define a term that you absolutely have to know. It's key to this whole story. After that, we'll dive into the specific crypto assets getting all this attention, and we'll wrap up by looking at the big picture strategy that's driving all these moves. Okay, so where does this all start? Well, it really kicks off with a massive, and I mean massive, move from one of the oldest, most respected names in the entire world of finance. A move that, honestly, sent a shockwave through the market.
Now, this is a really big deal. We've seen asset managers like BlackRock launch Bitcoin ETFs, where you can buy Bitcoin like a stock, but this is the first major US bank to jump into the fray. That's a whole different level of approval. It's a huge signal that the demand from their wealthy clients is real, and it's probably just getting started.
And you've got to understand, this isn't just about one Bitcoin product. Morgan Stanley is like the first domino to fall. You can bet they won't be the last. They're already looking past Bitcoin to things like Solana, and they're building out direct trading on platforms like E-Trade. They're not just selling a product, they're building the highways to bring all their clients into this new world of digital assets. Okay, so this Morgan Stanley news is the perfect example of a powerful force that you're going to hear about a lot, something called the institutional bid.
You're probably hearing this term get thrown around more and more. So let's just stop and ask, what on earth does it actually mean when someone says an asset has the bid?
So let's be super clear here. This is not about hype on social media. This isn't about retail investors piling into the flavor of the week. The institutional bid is all about steady, consistent, large-scale buying from the pros. We're talking about smart, patient, and very, very big money moving in.
And why is this so important? Because, let's face it, the crypto market can be incredibly noisy, right? There's a ton of hype and distraction. The institutional bid, well, that's the signal. It cuts through all that noise and shows you where the serious, long-term money is actually going.
All right, so now that we know what we're looking for, where is this institutional bid actually showing up? Let's start by zooming in on two major players, Solana and XRP. What's so interesting here is that they represent two totally different stories for institutional adoption. You've got Solana on one side, which is catching attention for tokenization, basically turning real-world things like funds into digital assets on a blockchain. Then, on the other side, you've got XRP, which is laser-focused on fixing the old, clunky infrastructure for global payments. And speaking of XRP, just look at this number, 54. That's 54 days in a row of money flowing into their spot ETFs. Let that sink in for a second. That is not a one-off event. That suggests a deliberate, sustained buying strategy by bigger players, stretching for almost 2 full months. Okay, but it doesn't just stop with Solana and XRP. The institutional radar seems to be widening, and it's starting to pick up signals from a couple of other really interesting projects. So, next up is Chainlink. Its job is to connect blockchains to real-world data, and the big news for them is getting an ETF approved by the SEC. I mean, it's now listed right there on the New York Stock Exchange. This is a game changer because it means a traditional Wall Street investor can just buy it in their normal brokerage account, no wallets, no private keys, none of that. The barrier to entry just crumbled. Now check this out. This next idea is a little out there, but just listen to what the CEO of NVIDIA is describing. He's talking about a future where you can literally take raw energy, use it to create an AI model, and then treat that AI as a transportable, valuable asset. It's a wild concept. And you might think, wow, that sounds like science fiction. But guess what? There's a project out there called BitTensor that is literally built on this exact idea of a decentralized network for artificial intelligence, and people are starting to connect the dots. And if you want proof that institutions are noticing, just look at this number. Grayscale's BitTorrent Trust, which is a product specifically for these big investors, shot up by a staggering 270% in just a few months. That kind of explosive growth isn't just random hype. That's serious capital waking up to a new narrative. So this all leads to the big picture question, right? Why are these huge firms looking so hard at all these different altcoins instead of just sticking with Bitcoin? Well, it all comes down to a classic Wall Street strategy. Here's how their thinking goes. First, they get their feet wet with Bitcoin. It's the foundation. But once they're in, they might look at Bitcoin and think, okay, a 2x from here would be great, but we're hunting for bigger returns. And that's step 3, the hunt for what they call beta, assets that have the potential to move way more than the overall market. So the result is that all that money starts flowing downstream into altcoins that they think have solid fundamentals and the potential for much, much bigger gains.
So when you pull it all together, you see it's not random. What we're allegedly seeing is a carefully selected watch list, a portfolio of different ideas. Institutions are making a specific bet on asset tokenization with Solana, a bet on payments with XRP, a bet on data infrastructure with Chainlink, and a bet on the future of AI with BitTorrents. Each one is a targeted play.
And that leaves us with this final, massive question. It really feels like we're just in the early stages here, right? If these institutions with their trillions of dollars are only just getting started, the real question we should all be asking is, what are the signals we need to watch to see who gets the next big institutional bid?